Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Tuesday, July the 29th. And I'm starting off with Kea Petroleum, whereas there has been a rising trend channel on the daily chart since December, break above the 200-day moving average, currently at 1.87 pence earlier in the month, and a beautiful little bull flag here above the previous initial July resistance. The view at the moment is that while there is no end of day close back below the 10-day moving average of 2.1 pence, we should see further progress within the rising trend channel from the end of last year, with a target as high as 4.5 pence, possibly as soon as the end of September. There's also backing there from the July RSI support line, taking us into overbought territory at the moment. But as I said, I think that support will hold above the 10-day line initially. Next up is Leni Gas Oil, where I've been stalling a bit on in terms of looking at the shares in the recent past. Slightly negative scenario here in terms of the consolidation there was after the peak above the 4 pence level. It was a double bull trap through the initial June high, but it looks like there's been enough time for consolidation here towards the sub 3.5 pence level and the floor of a rising trend channel from June, based at 3.4 pence. That's currently the technical stop loss. As we look for a new break to the upside, there was an end of day close to start the week above the 20-day moving average shown here in grey. And the best case scenario here over the next 1 to 2 months would be a meeting with the June resistance line projection as high as 5.8 pence. Also extended RSI support from April, the double bounce off that line, a neutral 50, which is taken as a positive. At this stage, only really sustained price action back below the 50-day moving average, currently at 3.05 pence, would be outright bearish from the stock. And we have to remember that also the start of this rally was delivered by an unfilled gap to the upside through the 1.5 pence level at the start of June. And when you see an unfilled gap, looking back on a stock, that tends to be a very bullish driver indeed in terms of the momentum. Finishing off today with Stellar Diamonds, where there's been an extended base along the 200-day moving average. This is a sort of favorite setup in terms of minnows as they start to heat up in terms of the upside argument. So here we had the gap down, but then extended support along the floor of April 2013 price channel as well, meeting with the 200-day line. That's currently around the 1.3 pence level, and the view is that at least while there's no weekly close back below that, we would be looking for progress here to the upside. Favored destination at the moment over the next 2 to 3 months is a retest of early 2013 resistance towards 2.5 pence. You can also see that the recent build here in the shares through 1.5 pence has been supported by an extended RSI support line currently based at 50. While that holds, we would be looking for an acceleration to the upside. That's it from me. More updates on spreadbetmagazine.com.